morning and welcome to Business Morning. Right here, we'll be tracking what's playing out so far. What's played out so far with Nigeria's economy, what to expect for Nigeria's banking sector in this first quarter of 2026. But here are the top stories we're watching at this time now, starting with global oil prices. We know the oil market did start off, quite shaky yesterday. Still looking for direction at this point. We see they're up again this morning, extending gains in Asian trade for a fourth trading session as fresh geopolitical tension there. That's stoking concerns about potential supply disruptions, from Iran. So that's what's playing out right there in the oil market. And we're seeing Brent crude trading above $64 a barrel, touching a 7-week high today, while U.S. WTI crude is hovering close to $60 a barrel, its highest level in a month. The rally is being, driven by growing fears that, escalating protests and political instability in Iran could threaten oil supplies. We'll drill down on other sentiments right there in the market later on. Let's bring it to the local boss now. The Nigerian stock market kicked off the new trading week yesterday on a strong and bullish note as renewed buying interest in key stocks added about 745 billion naira to the total market value in a single session. Market capitalization climbed to 104.52 trillion naira, while the all-share index gained 0.58%, reflecting, growing investor confidence in the equities market. Trading activity also picked up sharply with over 1.1 billion shares exchanging hands and more stocks closing in the green than in the red. The big question now is whether this momentum can be sustained and what's driving investors back into the market. We'll break down the numbers and the sentiment behind the rally right there. All right, we see Nigeria's banking sector showing strong momentum. It's in its ongoing recapitalization drive with a combined capital base, about 22 banks now, reaching 5.14 trillion naira as they race to meet new regulatory thresholds set by the Central Bank of Nigeria. The surge in capital reflects, broad commitments across the industry to strengthen balance sheets and improve resilience as lenders adjust to, higher minimum capital requirements designed to support growth and stability. We'll break down what this means for the financial sector, investor confidence, and the broader economy as the March 2026 recap deadline that's approaching. Countdown at this point. All right, that leads us to our first conversation now. We see Nigerian banking sector is entering a pivotal phase, as banks continue to adjust to recapitalization requirements and prepare for the challenges and opportunities, of 2026. With a combined capital of top banks now, surpassing 5 trillion, the industry is not only strengthening its balance sheets, but also positioning itself, for growth, resilience, and increased competitiveness. Now we look ahead, questions arise about the impact of these recap efforts on lending capacity, investor confidence, and market dynamics, as well as the trends that will define banking landscape in the coming years. Join me now for this conversation. We have Monsura Ademola Adeni, Executive Director, Alternative Bank. Great to have you on the show. Good morning.
Good morning, and how are you? I'm glad to be here.
Fantastic. Thank you so much for joining us at a short notice. But, let's circle back, to what's played out so far. How effective would you say the recap exercise has been so far, in strengthening the Nigerian banking sector? And what gaps would you say still need to be addressed?
Okay, thank you very much. Over time, since that's a historical question and coming to the present, I think those requirements by the central bank have become very necessary and have actually helped to strengthen the banking industry. And they come at the right time. For example, now Mr. President is talking about a 1 trillion economy. Who's going to strengthen the economy, if not the banks? That's where payments, all infrastructure requirements, and all the requirements of both the government and the private sector will pass through. So I think it's been very effective, and I think this new requirement, which is due to be met by March 31st, 2026, could not have been. This is the best time. This is the best time.
All right, so definitely we did get some recommendations. One from Mr. Femi Otedola. He did say we should take the main recap, number to about 1 trillion, for the tier 1 banks. Do you think that's going to be easy?
It's not about being easy. I think my personal conviction about that, it's just like you have had some banks to hit some certain targets. For example, the group which my bank belongs to have the conventional bank, the Sterling Bank, has done much more than what is required. So I think some of these things would also come naturally as you look ahead, the risk you're trying to take. You would know that, look, I need to do much more than what is required. And that sets you up to do much more deals, transactions than your other competitors. So yes, he has a point to the extent that when you look ahead, certain things need to be done. And that is what some banks are already doing.
Right, I guess at this point, we're looking forward to the next recap exercise. But what are the key trends and opportunities expected, in the Nigerian banking industry in 2026, particularly, digital banking, lending, and financial inclusion? I know that's one battle we've been having for the longest time.
Yeah, but I think we've talked about the first one. The recapitalization is major because things are going to happen differently when banks have much more than they have used to have. It means they will take more risk. It means they will think wider, and it means they would also look for how to make sure they monitor this risk. So we've spoken about recapitalization. I think the second thing, even though everybody, when you read it in social media, it's more like a buzzword, is the use of AI in the banking industry. For the banks, what they use the AI for now, they use it for fraud detection. They use it to actually monitor, review credits, especially in the consumer and SME space. And we're also using it for to improve customer experience. So that, I think, it's going to be a trend that more banks are going to get on, and overall impact will be our customers. So AI is something that is going to really be on the front burner, and it would continue to improve as the time goes by. The next thing I also see is, which you mentioned briefly, is embedded finance. What do I mean by that? Embedded finance now is in two parts right now, on the payment side and on the lending side. So on the payment side, you can see that you hail rides now, you make your payments, everything goes seamlessly. You don't even have to, you don't even at that point even have to have your card, because your card is already stored hitherto. And on the lending side, you can see lending against payroll and stuff like that, agency banking lending and things like that. You will continue to see things like that. Now, and I think what is critical, that is very important, because who uses banking services? Our customers would also see better things happening on the customer experience side, especially because of the use of AI. So, and you would see them demanding more, because they expect that you would see globally, you see when you travel, what you're experiencing, you want to experience it here. So you would see a lot of innovation around customer experience. And I think some banks have already started around that. What I also see, and we must not forget, is talent. People used to say we lost talent because people jackpot, and we hear that they are jackpotting back, right? But it's even much more than that. You can sit in your country now and get jobs and still sit here, so that jackpot still exists somewhat of talent. I think we're going to fiercely compete for talent, and those banks that are trying to make sure they are retraining, they are reskilling, are those banks that would win, because talent is supreme, and we must make sure we attend to talent. I think another thing that I see that as we grow, the other side is also growing. Cybersecurity, we must continue to strengthen things around there, because as we of the banks are having our good intentions. We also have people who are on the lookout for how can we take advantage of this. There's going to be a lot more attention to that, a lot more spending around that, and a lot more certifications. Talent is going to also, I mean, yesterday somebody was speaking to me and said, my daughter has this certification in cybersecurity that only other 240 people in Nigeria have, right? So we're going to see things like that. And I think overall, the banks are trying to win, and we are on the right path.
Right, and hopefully we see more lending to the private sector, in 2026.
Yeah.
So I'd like to get your own, personal view at this point. How's the recap process going for your bank? Oh,
the Alternative Bank, and as well as Alternative Bank is part of a group, the Sterling Holdings Group. This Alternative Bank had met its own requirements, 20 billion, since sometime last year. The Sterling Bank also has met its own requirement. And like I said, I also gave the example that Sterling did not stop. The Sterling Bank did not stop at what CBN required. They did much more than that. So for us, it's been a good experience, which shows the trust, confidence our customers have in us. And we will continue to ensure that we make sure that we live up to the expectations.
All right, thank you so much. It was great having you, and thank you for joining us, on short notice. That was Ms. Monsurat Ademola Adeni, Executive Director, Alternative Bank. Thank you so much. Enjoy the rest of your day.
You too.
All right, now let's get a check on all markets. Now, see the NESD Securities Exchange cap 2025 with a remarkable performance as, total market capitalization more than doubled to 2.12 trillion, up from 1.03 trillion naira the previous year. The growth was driven by fresh listings, broad-based price gains reflecting the exchange's successful push to diversify activity across equities, fixed income instruments, and digital securities. While trading on its flagship over-the-counter market remained, moderate, improved stability, and new company admission supported the overall performance. The surge underscores the NASD's shift from, strategy formulation to execution, delivering tangible results for investors and market participants alike. All right, Nigerians, let's also look at, what's played out so far. We're seeing definitely the MBS there. Give us some information on what to expect for the inflation data. Investors were bracing, for that this week. And we see the MBS also, trying to educate the public at this point, letting us know that we're going to be seeing, the new methodology and the old methodology. So we're expecting like two numbers, to give us, clarity, when it comes to the inflation number. So expect a spike in one of those numbers that's for the December data, and definitely we'll see how, the sentiment there drives what the MPC will do with interest rates, going forward. All right, to other news now. We see HF Markets, a global financial services company and multi-asset online broker providing platforms, for trading instruments like Forex, commodities, stocks, indices, and cryptocurrencies, is facilitating a training on ways to curb digital trading and Forex-related financial crimes. The three-day training, which was declared open by the Inspector General of Police, Kayode Agbetokun in Lagos, will be used to build capacity and strengthen the knowledge and investigative skills of the Nigerian police force in identifying digital trading-related fraud in Nigeria and across the world. Take a listen.
Senior officers of the Nigeria Police from various formations across the country are participating in a high-level training aimed at strengthening the fight against cybercrime within the Forex trading space. In his opening address, Managing Director of HF Markets, Mr. Okpe Abiola, expressed appreciation to the Inspector General of Police, Kayode Agbetokun, for the trust and confidence placed in HF Markets to facilitate the training.
On behalf of HFM, I thank you for honoring this invitation and for committing your time to this important program. We fully recognize the weight of your responsibilities and increasing demands placed on investigative officers operating in today's fast-evolving financial and digital environment.
Declaring the training officially open, the Inspector General of Police, represented by the Commissioner of Police in charge of the Department of Training and Development at Force Headquarters Abuja, CP Eloho Boziakpo, commended HF Markets for the initiative. He emphasized that effectively tackling cybercrime requires strong collaboration between the public and private sectors.
I wish to express the profound appreciation of the Nigerian Police Force to HF Markets Nigeria Limited and its partners for their strategic support of this training program. That effective security governance in an increasingly interconnected financial system requires structured cooperation between public institutions and responsible private sector actors.
Highlights of the program include real-life case studies, practical discussions on forex trading scams, and expert-led sessions aimed at enhancing operational efficiency.
We want to make sure that on the long run, Nigerians are well protected. When they come into the trading space to invest their hard-earned money, we want to make sure that they have the right understanding of what they are doing. And then for the law enforcement agencies to also be able to identify criminal activities quickly.
The officers here are from various units, are saddled with the responsibility of investigating financial crimes. So whatever skills they get from here, they will go back and cascade it down to the officer working under them.
As a global trading platform, HF Markets remains optimistic that the training will contribute to a safer digital trading environment in Nigeria. The award-winning online forex and CFD broker reiterates its commitment to partnerships that promote transparency, security, and responsible trading worldwide.
All right, now to our first conversation, another conversation on commodities. Now, Nigeria is one of Africa's major cashew producers. Yet the country is still exporting most of its cashew in raw form, earning about $700 million a year, while much of the real value is being created and captured in Asia and other processing hubs. Now, the industry is making a bold claim that with the right policies, investments, and processing capacity, Nigeria could grow this into a $3 billion raw export industry and potentially a $10 billion value-added industry within the next 5 years. Well, joining us to check the possibilities here, we have Dr. Joe Joseph Janaku, who is the CEO, Seacoast Nigeria Limited, and President, National Cashew Association of Nigeria. Great to have you on the show, sir. Good morning.
Good morning. Thank you.
Fantastic. So quite the number there, the potential we're seeing for Nigeria's cashew exports as if we add, value. But currently, I believe Nigeria earns about $700 million from raw cashew exports. Talk to me about this number. Why don't we have bigger numbers, at this point, in the current system? And who is capturing the value in that industry today?
Thank you. Once again, good morning, Nigerians. Nigeria cashew industry, like you rightly said, has a huge potential that can generate a lot of foreign earnings for Nigeria as a country. But there have been some kind of, not giving attention to this very sector. The cashew we are producing in Nigeria for now, we are exporting it because we don't have what it takes to process what we are currently producing in the country. There are a lot of things mitigating against that processing. For instance, the cost of funding is very high, and our processors are not able to compete with the outside world to see that they can make up with what other people are paying for the raw commodity. And so we feel that the government of Nigeria should critically look at this area. And the production currently, we don't have this normal structure on ground, the right statistics to determine the quantity of cashew or the amount of cashew be produced in Nigeria. But from the statistics we get, it's only what is exported out of the country. Yeah, you measure $700 million, but we know that it is well far above that, because many of our exporters who are majorly foreigners in the country, export those goods without completing the Nigeria export proceed form, because they want to invade the repatriation of that amount of it to come back to Nigeria. But for the NXP that are completed and they will have the funds repatriated, we are recording about 700 million. But Nigeria have more potential here. We can do more than 4 million tons of cashew annually in this country. And we, as an association, we run a statistic, we do some research with some geologists in the country. We discovered that Nigeria can produce cashew in about 89 to 92 senatorial districts in a commercial volume. And but currently it's only restricted to some about just major states that are doing cashew in Nigeria is just about 9 states, but we have the trade in about 22 states in Nigeria. So we can expand, and if we expand and we are able to do these 4 million tons of cashew, for instance, today price is going for $1,550. And if we are doing 4 million tons of cashew annually, we are looking at above $6 billion. And so this is why we are asking the government of Nigeria. I met with His Excellency Vice President, and he agreed with us that there is a huge potential in the cashew industry, and the government will bring its attention to it. So we are still looking up to that to see what the federal government is going to do on that aspect for us. Now, if we are talking of raw cashew nut alone, by the time we go into processing of these products that we have in Nigeria, in cashew, we have so many other byproducts. The popular one today is called CNSL, cashew nut shell liquid, which can be used for so many other things in the country. And after extracting that CNSL, we have the cake. The cake today is a lot of money outside the country. I just returned from my trip in Vietnam, and I met with one of the biggest processors in that country. And he told me plainly that only the money they are making from the cake alone is enough to cover the transportation between Nigeria and Vietnam. And those are the things we are missing as a country. So if we're able to put all those things together and we have the right policy for the sector, not an imposed policy, the right policy for the sector, we believe that we can generate a lot of resources for the country.
All right, and it's almost, starting to seem like what we've seen play out in the oil industry here. Definitely, we finally have, a domestic refiner here, and it was a huge investment, to get that started, and now we're able to refine, our oil. Talk to me about what kind of investment is needed to replicate what we've seen play out in the oil industry, in this, cashew industry, to get, processing and all of that. What kind of investment? Is it as expensive as setting up a refinery?
I don't know if you're hearing me. Yes, a lot the federal government, we need a lot from the federal government of Nigeria. They have to give us, like I said, we have SAPL, Special Agro Processing Loan. This is very, very important to encourage investment into the sector. If this is given and we have Hello?
Yeah, I don't know if you... Did you hear my question?
Yeah, I heard your question.
Okay,
what I'm saying is that
Nigeria
can do a lot to replicate what has happened in the oil sector by encouraging investment in the sector. That is, encouraging indigenous investors through what we call Special Agro Processing Loan. Let this loan not be more than 3% to maximum of 5%. That will help, that will encourage investment into the sector and will not be at the detriment of the producers, so that it will be a win-win product. I don't know if you're hearing me, Mr.
Yeah, I can hear you. I can hear you loud and clear. Yeah.
So these are the areas we think that the federal government needs to come in, and also to help in energy generation. The cost of energy today is not what the processors in Nigeria can compete with the outside community with what they are getting in their country. And so we need also to have this, our factories in Nigeria being given this concession, let them have there's a kind of subsidy, energy subsidy in the sector that will enable them process maximally. Those things are highly needed and very essential for the sector. That is the only way we can have the sector process and maximize profit. Then the farmers will not be at disadvantage.
All right, definitely we need to, see that kind of huge support, coming for our domestic producers here. But looking at the cashew value chain, what parts of it would you say offer the highest margins right now? Definitely you have the primary processing, secondary processing, byproducts. Which one gives the highest margin?
The highest margin now is where our potential lies from now, which is in production. If we encourage production and we are able to produce to maximum, then we can generate a lot of funds from what we are producing. Now, before we move into this, what we call primary processing, that is in the shelling, where we take only the kernel out of it and see what we can do with the shell, another byproduct. And one thing again that we are missing here in this country is the apple itself. We have a lot of potential. This is a lot of a product that is supposed to come out from the apple itself, but today it's being wasted because people are only after the nut. We can produce jam, we can produce juice, we can produce so many other things from the apple itself. So that's another way that will generate a lot of resources for us before we go into the industrial aspect of it, which is that of cashew nut shell liquid and that of the cake that I'm talking about.
All right, and looking at the regular cashew nuts that we see sold in supermarkets and sold on the streets and other parts, we've seen the price of a bottle that has stayed expensive for the longest time. I'm not hearing.
The line is cracking.
Okay, can you hear me? Can you hear me now? Is it better? Is it better now? Okay.
Yes, I can hear you now.
Okay, so I'm trying to understand. Yeah, the regular bottles of cashew nut they sell in supermarkets and see sold in the streets sometimes. The price of a bottle has stayed elevated for the longest time. What is responsible for that?
What is responsible for that is because let me say that the model of processing is still very cumbersome for the people who are processing it because they have not gotten these modular factories that we have been asking for the government to see what they can do about it. If they have a way of processing in a cheaper way, then they can sell it a bit less than what they are having now. But because the cost of processing is a bit difficult for them, cumbersome for them, so they are finding it very difficult to be able to sell it at a competitive price. And more also that most of the goods is going, cashew majorly is an export product. In Nigeria, we have granite, and granite is competing with cashew. So many people prefer to go for granite than going for cashew. That's why we look at it that way. So we believe that if the processing is being subsidized for them, we'll be able to get it cheaper. If we produce more of it, the law of supply and demand will come to play when money is chasing. When few money is chasing a lot of goods, the price on this won't come down.
All right. So at this point, how optimistic are you about this government, doing, what you've talked about earlier? You've talked about, government support, for the industry and, most of the value chain in there. Do you think you're going to get the attention of this government in scaling up this industry?
We are believing and we are hoping that meeting with His Excellency, the Vice President of Nigeria, that the government will bring his attention to the sector, but not without being pushed. They are very busy and very occupied. But we are having a conference, and this conference, we are believing that every one of them will be with us here, and when they are with us here in Abuja, then we can relate fine at the conference, which is coming up on the 22nd on the 24th of this month at the Presidential Banquet Hall. So we are working on that strongly to see that we have the presence of the President himself and the dignitaries that needs to be around, the people that are decision makers who will be with us in that conference. Then we can relate fine and see how they can participate and push the sector forward.
Right, and definitely when we look at most of these commodities, definitely we know there are countries out there that might be doing it better or running the industry better than we are. In your opinion, who are our biggest competitors in Africa? Who are our biggest buyers of Nigerian cashew at this point?
At this point, I didn't hear the first part of the question, but I heard the last one. The biggest buyers of Nigeria cashew for now, the processed one this is going to American market and that of Gulf Coast country that is moving from Vietnam to and India to all those countries. We have some few processors in Nigeria that are able to access those international market too. But good thing about Nigerian product is that Nigerian cashew, because it is known to be organic, always has its own premium price in every international market. When you go, for instance, when I was in UK, I went to a store, you see that this is Nigeria cashew have a different price from other commodity, other cashew coming from other country, because Nigeria cashew is known to be organic, and this is what the association is promoting, to see that we maintain this standard and have this premium price at all time.
All right, and at this point, let's just imagine, I'm a local investor. I have some cash on the side at this point, and I'm looking at this industry and saying, you know what, I feel I want to, test the waters here. What's the first thing I should be doing at this time?
First of all, go into production. Let's put our strength on where we have our capacity. Let's build capacity in our area. I don't know what kind of capacity the investor may be thinking, but the first place to start from is to build production, because this can also help to depopulate our urban areas who are already congested, and create jobs for people in the rural area, because many of our citizens that are in the rural area has no business in the rural area if they have businesses that they are doing back and at home. And if we increase production in the rural area, we have create jobs for our people who will not be migrating to urban area. So anybody having interest now should first of all go into production. And once you have that get right, then we can come into process, because processing cashew actually requires a lot of cost. It's a very huge investment, and so not everybody can just dive into it. And until we have these policies in place, like we said, that the federal government of Nigeria is able to come up with special agro-processing loan, especially for that of cashew. I usually said, give us a product paper in cashew industry and see the lot of jobs will create for our people in Nigeria, and the amount of revenue will generate internationally.
All right, I guess so many industries and commodities that needs the government's attention at this point. But thank you for helping us paint the picture here, Dr. Joseph Ajonoku, who is the CEO, Seacoast Nigeria Limited, and President, National Cashew Association of Nigeria. Thank you for coming on the show today, sir.
Thank you very much, Mr. Ladi. I'm grateful.
All right, we'll take a break now. When we come back, we'll do a deep dive on other commodities in the global space at this point. Do stay with us. commodities market update. We have Halima Adediran now, senior analyst at Financial Derivatives Company. Great to have you on the show. Halima, yeah, so we're seeing gold, that massive run from 2025, that's continuing in 2026. What's really driving investors to buy right now? Is it mostly the uncertainty around the U.S. Fed? We know there's so much drama going on between the U.S. Fed and President Donald Trump right now.
Yes, so thank you for having me. We'll see the price of gold historical. If we get set it back to what we see in like a year or 2 years before now. But currently, what is actually driving it is expectation and so many uncertainties in the financial market. We all know that gold is non-interest yielding commodities, but is majorly used as a hedge whenever there is financial uncertainty in the global financial market. And so like what we are seeing right now in the financial market, where the independence of the US Fed is being threatened, given the issue between the US Fed chair and the US president. So the market is trying to look at what could be the possible outcome of this tension, which could mean a reduced independence of the US Fed as a whole, which could mean that rather than we seeing a data-driven inflation interest rate shift, we could see a more of direction or as regards what the interest rate or direction should be. So that is one reason why we are seeing a surge. So people are moving towards the gold because it's a safe haven, and we will see that there's an inverse relationship between gold and interest rates. So that is number one. Then another thing is because the US stock and even the US dollar is under pressure. We'll see that for like 3 or 4 months before now, we are seeing the US dollar trading downwards when we compare it with baskets of other currencies. And so this is given a signal to global investors that this could linger for so long, coupled with the fact that there are so many data that are not yet, economic data that are not yet released in the US because of the government shutdown some few months back. And so it's not really giving investors the actual picture of what the economy could look like and the performance of the economy. And so we are seeing a shift towards holding gold and being a safe haven rather than just investing in the uncertainty as regards the stock market. And we know that the US dollar too is also traded as a commodity. So the market is expecting that it could decline further against basket of currency. So that's why we are seeing people holding gold much more than tilting towards the bond, the equities market, and even the currency market.
With gold at these levels, it looks like, you know, investors and countries that actually hold or trade gold, it seems most of them are cashing out at this point. What do you think could be that headwind for gold, you know, in 2026? Or is it just going to keep blasting up? Nothing goes up forever.
Apart from the fact that countries of the world are trading gold, we'll say that the retailing end of gold, so meaning the consumers at the individual level, is becoming high when it comes to the acquisition, the holding of gold compared to savings, compared to buying stocks, even here in the local market. So it's gaining more grants globally, nationally, and even on household levels too. We are seeing more interest in terms of investing in gold, so which is increasing the demand aggregately and is feeding on the price. That's why we are seeing a surge. So, and there's an expectation that the price will continue to increase, given the reasons I've already explained, the expectation of lower US interest rates, giving less independence of the Fed, given that even the US government is more of a low interest rate advocate, because he believes it will increase economic growth. So expectation of investors as regards other factors that could help the economy thrive, they're saying that it's tilting towards favoring gold. So in all, that's why we are seeing that surge in the gold price. So it's going to continue. It's very likely to continue into first quarter of 2026.
And I'm wondering if all of the geopolitical tension, suddenly ends and we see some kind of certainty, around the global economy, maybe that could be a negative for the safe haven asset, at this point. But what's playing out in with other, global commodities at this time? What interesting trends are you seeing?
Okay, so for Brent, what interests me the most, especially in the past few months, is that we are seeing sensitivity, especially in the Brent price, and this is driven by global headline and global news much more than the actual data. So the perceived fear as regards what is happening, for instance, now the current tension in Iran is making the investors expecting an increase in the price of Brent in the coming weeks. So that's why we see like a surge in the price of Brent currently. And so it is the other way around before now. What we usually see is expectation of supply glut, expectation of increase in demand, but now we are seeing that geopolitical tension and even news headline, global headline, is feeding into the price of commodities much more than the actual demand and supply swing or change. And this will have so many knock-on effects on not only currencies, it will have on inflation, it will have on so many other economic data. For instance, now, if the Iran tension continues or lingers for more than we expected, we will say that it will filter into export disruption, because Iran is one of OPEC's highest exporter of crude oil, and that will even cause cost-push inflation for importing countries, and even import bills could rise. So basically, what we used to have is demand and supply trend affecting or dictating the price of a commodity, but now we are seeing more of expectation, global headlines, and even news driving the price much more than what the actual production is.
All right, definitely a lot to unpack there, but let's bring it down to the domestic commodities at this point. What's the trend there? Are consumers, getting some kind of break?
I think so. From our market survey, that is what I could deduce, because most of the prices of the local commodities are flat. I think it's only beans that traded downwards a bit. So, and that's because of its ample supply. And I think it's in season, so it's helping the price to really move downwards, compared to what we had in the last 6 months before now. So, but I think people have already shopped the festive period. They've stocked their homes to a reasonable extent. So buying is not as much or as large as what we had in the festive period. That is last month. So I think people are taking a break from buying now. So it's kind of helping the pressure that we are expected, or we hope to see in the prices of domestic commodities.
All right, so definitely. I'm all for looking out for data, showing the state of, the Nigerian consumer. Hopefully we can get that, to really gauge how consumers are faring at this point. But thank you so much. We'll definitely unpack more on what's playing out with those commodity markets. Thank you, Halima Adediran, analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now let's head on to the global space. And for what's playing out in the global economy, we have John McQuarrie with the details at this point. And we've been talking about tension, geopolitical tension, intrigues right now. But we're seeing the central bank governor of the biggest economy in the world and the president They're not in good terms.
And we saw what that did in the market yesterday, at least for the futures. We saw everything in the red, the U.S. markets early yesterday because of uncertainty. Investors do not like uncertainty, and we don't know where this is leading to. And sometimes we even forget that it's President Trump that appointed Mr. Jerome Powell.
Exactly.
You know, we tend to forget that, but he's the one who appointed him. So perhaps he didn't read his resume well. And
he didn't know how stubborn he would be.
Exactly.
But I guess, you know, this is good, I believe.
Yeah,
you know, seeing that the executive has no influence over the central bank.
Independence of the central bank.
Right.
And the funny thing is, one would have thought that things like this would only happen in emerging economies or developing economies and all of that, not in the #1 economy of the world, where you see a clash of and a question mark on independence of the central bank. The president wants interest rate cuts, and the man at the helm of affairs in the monetary policy says, we don't see the data that's driving that. We have to wait until we see it. And so, I mean, the president cannot just tell us, cut interest rates, and then we'll cut
just go ahead and cut.
Maybe in another country, not in the U.S. I didn't say anything there. Yeah, well, that's what we're starting with. Good morning, everyone. We're starting with Mr. Jerome Powell, where for the very first time, we've seen clashes. And I think this dates back to, remember that video where President Trump went to, there was the reconstruction or construction or enlargement of the Reserve building, and he said there was contradiction in the numbers. Well, that's taken up now, but we see Mr. Jerome Powell responding to President Trump's attacks. And the administration is now worried about its plans to replace the Fed chair. Already we know his tenure ends in a couple of months. That's the Fed chair. And I know Mr. President Trump has already aligned, you know, the individual who will take up that seat. But before he gets out, it seems there's a whole lot of rivers that would have to cross. Let's get the response of Mr. Jerome Powell.
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned, in part, a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
So there you have it, Mr. Jerome Powell responding to that. So we know, of course, we've heard of the clash before now. But now let's get the perspective or the views of what's going on in the United States from our correspondent, Maria Bird, who's in Washington, very close to where all of this drama. Maria, good morning. I never thought we could see this kind of scenario in the United States of America, perhaps in Nigeria. What's really going on? People say this is about the independence of the Federal Reserve. Mr. Jerome Powell there says it's just because they refuse to cut interest rates as the president had asked for.
Yes, this is a very, as you mentioned, unprecedented for the United States. Can we expect something like this? I think that over the last year, we have seen several indictments for either former political figures, or in this case, we're seeing this against the Federal Reserve and specifically the chair, Jerome Powell. We know the president, since he walked into office almost over a year ago now, he was very clear that he was interested in interest rates being cut. He was very interested in addressing the economic challenges many Americans were facing, and felt that interest rates were a way in which some of that could be addressed. And so the chairman, I think, might he be surprised potentially at the indictment? Yes, but he does know the president's intentions when he did walk into the office. But as you mentioned, one of the very unique things about a democracy, and specifically United States, is the separation of powers. And the Federal Reserve has always been an independent agency, which has been able to provide the economic outlooks, has been able to provide the economic stability and the forecasting and making those decisions for the country. And that's what the chairman has continued to do. As you mentioned, he has been a chairman for the Federal Reserve through several administrations, including the Biden administration. So the focus is for it to be agnostic to party, but more so for the best interest and for the health of the economics in the United States.
Yeah, so what does this say, Maria, about maybe the successor of Mr. Jerome Powell? But I mean, not forgetting that even Mr. Jerome Powell was appointed by President Trump. But does it kind of set a precedence of fear and authority, of being authoritative? I think that's the word, you know, where we see maybe a successor having to follow the orders of the president, or else you also face this kind of backlash?
I think as you're being very clear to indicate, we know that Chairman Powell's tenure will be up in March. We know that there's a list of candidates who the president is looking to potentially put in place. There was some speculation some months back that whether or not the chairman would make it all the way through March, or if we would see a new chairman placed before that time period. And so we will see someone that will be in alignment with the president's ideals. Now, the question is whether or not Congress will confirm that individual. Due to the way in which the U.S. is structured, it will require that Congress is able to approve the person that the president does choose. Now, noting kind of the balance of power within Congress, knowing the strength of the Republican Party, and specifically the MAGA section of the party, potentially we could see someone that is very much in alignment with the president's beliefs. But I think that we're still a few months away from that. I think that we're in a position right now where we have a chairman that's in place that has received a grand jury subpoena. So watching this unfold, I think, will be very interesting for the American people, one that they've never experienced before. I think Congress is also, this is going to be a very unprecedented experience for them as well. But I think it will have a large impact on what we see when it's time for a new chairman to be placed.
All right, Maria, thank you so much and for joining us this morning. Of course, we trust you to always keep us updated on what's going on there. All right, so let's see other stories from other parts of the world, starting from the United Kingdom, where house prices are set to increase by 1.5% this year, 2026, with Scotland and Northern Ireland showing the strongest growth, while London and Southern England lag behind. That's according to a new report from real estate website Zoopla. Scotland's Motherwell postal area tops Zoopla's ranking of UK property markets with a projected average price rise of 3.4%. In England, Wigan shows that the best prospect with an expected 3% increase, followed by Liverpool 3.5% and Stoke-on-Trent at 2.8%. Outside the United Kingdom, shares of Chinese electric vehicle makers rose sharply today after the European Commission outlined conditions under which Chinese automakers could avoid import tariffs in the bloc. I believe we started this conversation yesterday. Other automakers, including the Leap Motor Technology Co., Geely Automobile Holdings, we know them in Nigeria also, and Cherry Automotors, they rose between 1% and 3%. The European Commission on Monday set out conditions where China-based EV makers could avoid import tariffs by agreeing to sell at minimum prices in the region. And then in Japan, the country may face its own version of U.S. fiscal cliff. In Prime Minister Sanae Takaichi calls an early snap election if she calls for it, a move that could delay parliamentary approval of a bill that grants the government that right to issue deficit covering bonds. And still in Japan there, the finance minister said that she and the U.S. Treasury Secretary Scott Bessent, they shared concerns over what she has called the yen's recent one-sided depreciation as Tokyo steps up threats of intervention to stem the currency fall. The minister there's comments reflect Japan's rising unease over a slide in their currency, the yen, which crossed the key 158 yen for a dollar mark for the first time in about a year, following report that Japanese Prime Minister may call a February snap election. And in Dutch, inflation there remains unchanged from what they had in 2025, matching previous year's rate. And that's according to data released by the Dutch Statistics CBS. So consumer goods and services prices in the Netherlands increased by an average of 3.3% in 2025, and the same that was recorded. Talking about steady inflation right there from 2024 to 2025 and begin the year 2026.
All right, thanks so much, Annie, for the details there. And news just in, January 2026 issue, that's the FGN Savings Bonds offer that is on right now. 2-year FGN Savings Bonds due January 21st by 14.39%. Closing date January 16th. So there we have it, the January 2026 issue there for the FGN Savings Bonds. Thanks so much for watching Business Morning today. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.